Investopedia editor-in-chief Caleb Silver joins us now with the results. All right, so let's talk about this investor sentiment survey. I want to start this off in the context of we got some new consumer sentiment numbers from the University of Michigan surveys of consumers on Friday showing sentiment fell to a 7-month low. How does that line up with what your investors are feeling?
I think very closely, and they've curbed their enthusiasm. They were very optimistic after the election, and we had record highs, we had risk on, but I think since then they've really pulled back because of the uncertainty. Tariffs, economic policy is all uncertainty. Uncertainty is like kryptonite for investors, and when they can't see the future, we just sit on our hands. Bigger investors sell first, ask questions later, but retail investors like us, we just sit back a little bit and we're kind of cautiously optimistic. 1/3 expected 10% drop or more in the next 6 months. Doesn't sound like a lot, but that's at a 12-month high. 49% believe the market is overvalued. They're continuing to invest in the same stocks they think are overvalued, by the way. 36% say they're making safer investments, and that includes money market funds, and they're really concerned about tariffs, inflation, and what that might lead to.
In terms of tariffs and inflation, is one a bigger concern than the other?
Yeah, it's tariffs, and that's number one on their list. We always ask them, what are you worried about? We give them a long list of things to choose from. Tariffs at the top of the list, inflation next, and guess what? Relations with China right after that. But then we get into some things like potential the overvaluation of AI. They're worried about that suddenly because of DeepSeek a few weeks ago. They're concerned about deepfakes on the internet affecting the stock market. There's all these new sets of concerns right now that maybe didn't exist a few weeks, even a few months ago. They're top of mind for investors right now. And when you can't sort of see the future because every day we're getting news of a new executive order, new tariffs, changes in policy, it's really hard to kind of go ahead with the strategy that you went into the year with.
It makes sense because I think one of the themes that we've talked about with different analysts in terms of expectations this year is volatility. So that makes sense in terms of the uncertain landscape, and it seems like every week there is something new. It was 2 weeks ago, it was tariffs. It's tariffs again this week. 2 weeks ago it was DeepSeek. I'm sorry.
Yeah, it's January 55th, by the way, because this has been sort of the longest start to a year ever. So there's been a lot in news every day. It's kind of shaken investors' confidence a little bit because there's really nothing you can depend on. Things are not going to work the way they were used to work in the past, but they are focusing on the things that actually do matter, on the fundamentals of the companies they own. They own the biggest companies in the stock market. Retail investors like us like to herd. We ask them for their favorite stocks every 2 months.
What are they?
And they are the top of the S&P 500. NVDA, Apple, Microsoft, Meta, all of the big names, Tesla even, that they keep buying. And then we ask them, Diane, what stocks would you buy today and hold for the next 10 years?
Oh, that's a good question.
It's the same set of stocks. So they're worried about overvaluation and bubbles in the stocks that they own. We're all kind of worried about that. How long is this going to be sustainable? Yet we continue to buy the same stocks and say we will for the next decade or so. Now that could change, but right now retail investors are kind of all herded into the same big trades and afraid to get out.
Is there feeling of FOMO? Is that why that's happening? Do you get the sense from your survey data?
Yeah, and when you look at it, when you ask them what if you had an extra $10,000 right now, I think this is the ultimate discretionary investing question. Where would you put it? They say individual stocks because they see individual stocks way outperforming the market in some cases. It's been NVIDIA, Supermicro, MicroStrategy, Carvana. They see these story stocks that are outperforming the market, whether they're in a narrative or not, and they think, well, maybe I should just bet on that second in terms of what they think will do better under the Trump administration stocks, and then it's cryptocurrency. So that's a very risky end of the market. But retail investors that just invest every 2 weeks, there's some FOMO. That's why you never see like a 10% correction anymore these days. Not that we won't, but we haven't seen one in quite a while.
Yeah, I mean, whether you're talking about retail investors or institutional investors, I think there is some expectation of that within where we are, especially given how we've performed. And I know you and I talked at the beginning of this year. We talked at the beginning of last year and the expectations for last year. You certainly saw outperformance, whether we're talking about the Mag 7 or the broader S&P 500. I don't know if that's going to be the case this year because some say this year could be a stock picker's year for 2025.
Yeah, we talked about this a few weeks ago, too. It kind of is, and it all has to do with proximity to power. Which companies, which industries have the favor of the Trump administration right now? Those are doing pretty well right now. We just heard of new tariffs on steel and aluminum. Of course, that's going to favor the U.S. steel and aluminum makers and the metal makers, but ultimately it does raise prices for everybody, puts them in a challenging spot. So it's a tricky time to be an individual investor picking individual stocks, but individual stocks have given us the alpha, where if you just invest in the market, you did great for the past couple of years, but nobody wants to do just great. They want to do even greater.
And so the investors that you all survey, they also expect crypto to outperform this year as well. That seems to line up with kind of broad expectations under the Trump administration, given the talk about potentially having a crypto reserve or Bitcoin reserve. Do they favor Bitcoin? Are they into the meme coins? What's the deal with that?
Well, not everyone's investing in it, just like the rest of the country. It's like about a 10 to 15% penetration, but it's been growing with our readers who are self-directed investors. They like to put their own money to work. Maybe they work with a professional, but they also like to follow and monitor their investments. So yeah, it's Bitcoin. Bitcoin's the big one for them. We asked them which ones they own. It's Bitcoin. A lot of them own the ETFs right now, and there's going to be a lot more of that product coming their way.
Yeah, indeed. And then what do you want to leave us with in terms of your final takeaways from that? One of the things I do like is the emoji meter for sentiment. What is that about?
Yeah, it's just what's your vibe right now? Are you cautiously optimistic? Are you extremely optimistic? Do you know when to walk away, know when to run? 41% say they're cautiously optimistic. About 13% say they're optimistic. Only 3% say they're extremely optimistic. So you have about half people saying they're kind of optimistic, but their expectations for returns a little bit more muted, 5 to 10% versus 10 to 15%. Maybe they'll get some upside there, but I think people have watched the last couple of years play out and done very well, and now because of the uncertainty, they've muted their expectations.
All right, that's Investopedia's latest investor sentiment survey with the one and only Caleb Silver, editor-in-chief over at Investopedia. Thanks a ton, Caleb.